Hello. Good morning. Can you guys hear me in the YouTube world? It's early for me. But this is a part of the new schedule we're going to be sticking to every single week in the Capital Hungry community. How are the Capital Hungry hyenas doing this morning? Sound check, visual check, audio check. Okay, welcome to a Capital Hungry scalping stream. We are going to be doing analysis on both intraday and scalping analysis on gold, GBPJPY, GBPUSD, Euro USD, USD CAD, as well as US 30. We're going to be looking at market sentiment first and looking at the price action and movement of our safe haven currencies such as the dollar, Japanese yen, as well as the movement on the volatility index. On the right of your screen there, the VIX. We're going to be looking at how global equities are moving. Any economic data reports we have to focus on during our New York trading session, recent fundamental points, and then doing our analysis across pairs, and then patiently waiting for those trade ideas to take some potential scalps through the pre-New York and New York open session volume, as we're going to be running this stream till roughly 9 a.m. Eastern, the new 4-hour candles. Okay? Before we get into it, I think Roger's streaming too, so probably not going to get too many views, and I'm streaming much earlier than I usually do, but hey, it is what it is. We're not doing this for the views, we're doing this for the hustle. So, some stream reminders. Please take a second, if you guys don't mind, to read the YouTube description, as well as the layout of the YouTube, and your stream reminders that popped up on this little chalkboard animation here. This is not financial advice, but feel free after I go through the whole process of giving analysis on market sentiment, gold, and the other pairs, as well as the fundamentals and technicals. Then after that, feel free to ask me whatever you want. If I have the answer, I'll answer to the best of my ability, okay? But do not come into the chat asking for direct signals. We are here to provide each other value, discuss the financial markets, learn from each other, as well as potentially take some scalp trades through the New York volume, okay? Any questions about the Capital Hungry private service, just go to capitalhungry.com or message me personally on Telegram. There's also going to be a ton of Capital Hungry private members within the chat supporting the YouTube as well. And you have tons and tons of Capital Hungry resources to follow and use at your fingertips and disposal. From the Capital Hungry News Twitter, Capital Hungry free Telegram analysis channel. This Capital Hungry YouTube is packed tight. It's packed tight with content. And what I want to follow up with is we're pretty much going to be continuing trade ideas in terms of my bias on Japanese yen weakness, US dollar weakness, volatility index being bearish, and global equity still being bullish, and the same analysis and trade ideas pretty much that was given during the Monday market analysis webinar. These are not going to be scalping sessions. They're going to be 30-minute to hour-long webinars where I'm going to be giving market updates and intraday analysis across pairs. We already did one on Monday, obviously, and it's going to be pretty much a continuation of that webinar. But on the Capital Hungry YouTube page, you have tons and tons of free educational content at your fingertips, whether it be quick, short videos on fundamentals, full analysis and breakdowns on pairs like crude oil or crypto markets, live trading sessions, Monday market updates or overall live market updates, psychology webinars, fundamentals, technicals, and so much more. Don't forget to check out the Capital Hungry News Twitter, which websites such as Forex Factory and other trading websites source for news. It's constantly posting headlines all day. It's all automated as well. And then the Capital Hungry free Telegram analysis channel. Now, before we jump into the nitty-gritty of doing our analysis, please remember, all of us here, including myself, sitting in my Fruit of Looms, at my desk here, behind the screen, as well as the people in the audience, we are all manual retail traders, okay? None of us are institutional traders. None of us are big bank institutional traders. We are not whales, all right? I see myself as on the same level as all of you except we have different levels of experience, knowledge, and how we chose to develop our skill sets. But on every other playing field, we're on every other level, we're on the exact same playing field, okay? We are manual retail traders who have emotions and 1,000 other aspects that impact our decision-making process. So the best way to avoid falling into any emotional decisions is to have a very strict trading plan. So make sure once you create your trading plan that you follow your trading plan, you follow your risk management plan, you focus on the long-term vision. For everybody who always wonders, oh, what's Jeev mean by focusing on the long-term vision? It means not going after instant gratification and focusing on your long-term goals more with the scope of more focusing on the probability, math, and number side of trading, where you know that if you have a 1-to-2 risk versus reward ratio or 1-to-3 risk versus reward ratio, and you stick to it, that you can still sacrifice a 50 to 60% win rate and be very profitable over a long-term stretch of trades or through your trading career. So it's always good to keep that long-term vision in mind and stay relatively grounded, that at the end of the day, this is not a game essentially about being right or wrong or trying to flip your account or make a crazy amount of money in one single day. It's all about your long-term goals and slowly chugging away and building your house brick by brick, properly laying every single brick on the ground, making sure it's perfectly lined up before you line up the next brick, and then eventually you have a wall. Once you have one wall created, then you make another one. Eventually you built your house, right? So remember, follow your trading plan, follow your risk management plan, focus on the long-term vision, and avoid crashing your account. Okay, some recent fundamental points from last week on Friday, which these fundamental points are still very active. We know that during the Jackson Hole Symposium, or if you watched the Monday Market webinar I did, the Federal Reserve pretty much delayed the tapering discussions as well as are delaying any interest rate hike discussions for the time being. They're going to be much slower, much less aggressive, and much more patient with their tapering process until they reach maximum employment figures and have and have full force back into the labor markets. This is also just something they're telling the media, where the US labor market has already been heavily rebounding. The main reason why they're going to be very slow and delayed with their tapering and interest rate hikes is primarily because they want to keep chugging away as many stock market they want to keep chugging away as many stock market gains as well as many housing market gains as they possibly can. The Federal Reserve is very well aware that if they rush into the tapering process and are too aggressive with decreasing their asset purchases as well as hiking of the interest rates, they know that it will cause massive price fluctuations and a very large correction on both the US stock market, which will impact corporate America, and on the US housing market, where within this huge financial market, everything has some type of interconnection like a huge spider web. So they don't want to cause a major ripple effect on their pockets, on their portfolios, and on the 1%'s pockets by having a massive change in the interest rates too aggressively or tapering too aggressively. So when they confirm that they're not going to have any rush with tapering, the financial market impact of this that shows stimulus is still active means that equity markets are going to continue bullish, and we have higher probability of the US dollar continuing bearish, where this was the downside move that broke the zone last week with that Federal Reserve move, and we're still remaining below this price sensitivity area for the time being, right? I'll show you guys that in a second. So our Japanese yen by itself, the US dollar by itself, as well as the volatility index are still relatively bearish on the higher time frames, as well as on the intraday time frames. The global stock markets are bullish, and we don't have any fear, uncertainty, or doubt in the markets that's actually causing major impact. I understand that we do have some Middle Eastern tensions that are coming to the table, but it's nothing that is causing too much of a high impact on the overall markets. Another thing that we all just have to understand and note as manual retail traders, and as we're going to be potentially scalping, is that we just had the end of the month yesterday and a start of the new monthly period today. So we do have the potential for some order flow set up on the higher time frames as we start to do analysis across pairs here. So now you can see when I'm looking at market sentiment, the volatility index, which is pretty much the inverse information about the US stock market, it gauges the volatility on the S&P 500, which it pretty much looks at short selling data. If there's a massive amount of profit taking on the stock market as well as short sells entering the market, the volatility index goes up because the ideology is stocks are only bullish. Stocks are bullish. So if you have massive amounts of short selling on the stock market, this usually means there's some type of fear, uncertainty, or doubt, hence why the volatility index goes up. So usually when you see massive downside moves on the stock market, the VIX will already start pushing up ahead of time because all it does is analyze the amount of short orders entering the US stock market as well as the amount of buy orders leaving the market, and that's how it gauges the volatility within the US equity markets. But overall, we can see the volatility index is bearish when you go to the higher time frames, as it's the inverse of the stock market. This is the Japanese yen on the 30-minute time frame, but still relatively bearish if you go to flip out to the 4-hour or daily time frame as well, which you can see is still showing us markets are optimistic. And the same thing for the US dollar on the 4-hour chart here. You can see that we broke into these previous lows and are holding some intraday bearish market structure while also having the fundamental bearish impact that comes from what we were talking about of the Federal Reserve. So when we're understanding market sentiment and investor behavior, our world's reserve currency, the dollar, is still relatively flat. Japanese yen is flat. Volatility index is relatively bearish and flat. And our global stock markets are still bullish, either sitting at all-time highs or sitting at highs or going into those all-time highs, okay? So that shows me that markets are still very optimistic. If you were looking at the analysis that I gave you guys on Monday, this was the reason we were on a GJ buy bias. You can see as per scalp trades, when we're coming here and looking at GJ, and as per the structure to do some analysis now, before we jump into GJ, I forgot to discuss the economic events. So overnight, we already had some UK manufacturing PMI figures as well as the Germany manufacturing PMI figures, which we're going to review here in a second. But what we're primarily going to be focusing on is at 8:15 a.m. Eastern, we have the US ADP non-farm employment change. Now, this isn't obviously the actual non-farm payroll. That's going to be on Friday, which is the NFP unemployment data and wages data. This is more from the private sector, which still is going to have a short-term impact on the US dollar, equity markets, and gold. So we're going to have to keep an eye out that at 8:15 a.m. Eastern. Now, this stream's probably going to be ending around 9 or 9:30. But at 10 a.m. Eastern, if you're still trading during New York session, we do have some more high impact US economic data, which is the ISM manufacturing PMI, which is going to give you a lot more information about the manufacturing sector and how it's rebounding within the US economy. So before we jump into GJ analysis, let's just review what we got going on here. Just because I just woke up like an hour ago too, so I didn't get to see what happened overnight yet. Okay, so the Euro PMI was just 0.1 off, but the UK's manufacturing PMI was actually better by 0.2. Now, if you understand, oh yeah, we also had, but anyways, also if you understand PMI figures, you would know that anything above 50 is still showing us a potential healthy economy. When you're looking at PMI figures during the pandemic crash, they were all dropping to right around the 50 scale or below 50. But now with PMI, when you're looking at the overall growth in majority of countries, especially on the manufacturing sector since the pandemic crash, we have seen more and more rebound. For example, this is see how they have this stead line neutral baseline right at 50 here. If you guys can see this on my screen, basically the PMI figures is a business survey done across sectors where the general basis is if you're below 50, you have extreme economic uncertainty within that sector. But if you're above 50, you're still within a healthy range and you still are showing potential strength within that sector. So you can see with the actual pandemic crash and even a bit before that, UK's manufacturing PMI dropped well below that 50 price point, or that 50 grade point, we're going to call it, because this is just a grade in terms of this survey index. So 50 just being that medium graded point, where below 50%, we'll just say it like a grade at school. Below 50% means you're failing. That's how I'm going to give you guys an example. Below 50% means you're failing. Above 50% means you're doing good. You're going to pass the class. All right. You can see with the pandemic crash, manufacturing PMI had this heavy drop, but quickly, just within the next couple of months, came back to that 50 level. And since then, we have actually been having a continued increase in data. Yes, you get some of these minor blip reports that will cause a pullback because nothing is just going to go straight up and continuously improve. But you are seeing that the PMI figures have been consistently increasing above that 50 graded point and well above the pandemic crash point. So PMI figures across nations have been showing that improvement, that economies are coming back to full force, and that's good to see there. Also, we're going to be focusing on the ADP national employment, where the prior was 330,000 jobs. Now they have expectations within the private sector at 613,000 jobs. And then you have some of the ISM manufacturing PMI on the US here. I'm going to show you guys an example on the US side now here, which is going to look pretty much identical to the UK. This is the market manufacturing PMI. If it loads here, how come they got in this shitty ass chart? But anyways, same idea, except they got a bar chart here. I don't know if I can change it into a line chart. But anyways, same idea. You guys see the 50 graded point here. You can see before the pandemic, we were roughly sitting at those 50 areas. Oh, this is a nice one. You can see before the pandemic, we were sitting at those 50-point areas. During the pandemic, had a massive, massive drop in the manufacturing PMI index. And then same thing as like the UK. Ever since after the pandemic crash, we have been well above that 15 median point, actually showing even stronger economic data than before the pandemic. Very interesting, right? And we know that the manufacturing sector, industrial sector, retail sector, it holds a lot of value within an economy, and you can get a lot of information about the economy's health when you're understanding PMI figures. So economists love to look at those PMI figures and how they are trending and moving, and it tells you a lot. But the reason why I'm talking about that is because one of the main reasons we had this intraday upside move here, where we broke out of the consolidation range and continued the buys above from 151.2, 151.5, and now to 151.8, is because that PMI figure was still rebounding and showing strength. So now, obviously, I'm still very bullish on GBPJPY. When we're going to the higher time frames here to look at the daily time frame and to doing some rough higher time frame analysis, very similar to the market update webinar, you can see we're still maintaining this demand area of interest, which is the last price sensitivity area, holding technical bullish market structure on GBPJPY after reaching these highs printed and entering this pullback phase here. Okay, we have some very strong bullish price action, similar to how we've had off of the bounces in this area before, around 149, as well as some intraday bullish market structure developing that we mapped out on the 4-hour time frame. And of course, Japanese yen still bearish, some strong UK economic data, and GBP equity still very bullish across the board. So fundamentally and technically, I'm still in a bullish bias on GJ. The only thing I'm iffy about is that this new monthly candle, and it doesn't have to, there's a high probability it will, right? Especially when you look at the monthly candles and 3 monthly candles, 3-month candles, 6-month candles, this new monthly candle just opened up, obviously, within the last daily period, and has yet to create any lower wick. So that's something I'm being a little bit iffy about, is that when you guys look at, from a technical perspective, when you look at higher time frame candles, if you were to count every 8 out of 10 candles in a stretch, you're going to see that there's a wick created on both sides of the candle. Maybe there's the 1 or 2 off candles every 10 or 20 candles, but just from a technical cue, you do notice that majority of candles on the monthly, weekly, and so forth do have those potential upper and lower wicks that created. So it would be ideal if this new monthly candle here on GJ created some type of lower wick just to grab liquidity. It looks like it has a really small nipple wick here, or just the flat bottom still. So if we don't break this bearish corrective structure from these highs, right, and we fail to break there, I would not be surprised that we turn a bit bearish to create that lower wick and then still continue back up bullish with overall market optimism. But for the time being, we're still holding that bullish market structure on the intraday time frames for the time being. That's just something I want to keep in mind. But it's not something that we want to stress about, because we still have 29 days this candle is active, and it could easily make that lower wick through that monthly period. But just something to keep an eye on there. But other than that, historical repetition for recovery is still looking pretty strong. We're potentially clearing above this bearish market structure. Higher time frames, this was the 2008 financial crash. This was Brexit. This was the pandemic crash. We never ever broke these candle body lows, no matter if it was a 2008 crash, no matter if it was Brexit, no matter if it was pandemic. We never broke below that around that 128 price point. You start to form some of this bearish corrective structure here. Once you break above that and have economic rebound, you can see you have this pretty large rally that can take place. When you're looking at GBPJPY, once we technically break above that 156 price point on the higher time frames, as well as that bearish market structure, and have continued market optimism, there's a lot of potential for GJ to go into the 160s and 170s as long as Japanese yen continues bearish, and you're looking at historical repetition stretch similar to seen after the 2008 financial crash here. Right? But anyways, that's just some more higher time frame review, higher time frame analysis. I know none of the scalper hyenas give a shit about that. Gee, just tell us what trade to take. Tell us, is it GJ buy yet? Is it GJ buy yet? All right, so I am in a GJ buy bias. I'm actually looking for the breaks above 0.800 here on the lower time frame to start taking some more buys back up to 152 and scalping that range. You can see, besides the breakout buys that I called out on the last market update webinar, we had a nice clean move during our intraday time frames. And in terms of price action reading, everybody, we had this consolidation zone where we failed to break previous price sensitivity areas, and then we broke into this new intraday high with some strong bullish price action. We had this pullback, 2 bearish candles here, right, that did not engulf this bullish push and did not cancel out that bullish push, just being a pullback, with the potential that if we remain above 0.800 here, we can catch some nice scalps to revisit these highs in potentially 152. So what I'm going to be looking at pretty much on GJ once we do our analysis on the other pairs is some lower time frame break and retests on the 1 minute above 151.8 to start to look for 10, 15, 20 pip scalps to revisit these intraday highs and potentially 152. The buy areas I'm looking at on GJ with NY volume coming in the next 20 minutes is either we hold above this area and take the buys from 0.800, or we get a deeper pullback and take the buys If we do come below here, deeper pullback, still taking buys from 151.5, or the break and retest buys above 151.8, even the safest buys if we break above 152. So Japanese yen is still bearish. UK equity markets are still hot. UK PMI data was stronger. Structure is bullish. Price action is bullish. So those green boxes are the buy areas I'm looking for on GJ. I would only be looking for sells on GJ in two spots. One, if we come up to the historical level at 152.5 and fail to break. Or two, if we break this bullish market structure and come below this order block and consolidation zone at 151.2. My main bias on GJ is still buys. I would only be looking for sells if we came up to 152.5 and failed to break, or if we break below 151.2. Otherwise, this is my main bias. Okay, everybody? So GJ, I'm in a bullish bias. Now, GBPUSD, I'm also in a bullish bias, but you can see as the dollar has been ranging, we've had a bit more indecision on GBPUSD. But when we are to go to the higher time frames, such as the daily time frame on GU, you're going to see similar market structure and price action and overall price movement to GBPJPY. Fundamentally, why is that? Even though these are different pairs, why is GBPUSD and GBPJPY have such similar market structure? Well, the reason why GBPUSD and GBPJPY have such similar market structure is because initially you have a risk currency against a safe haven currency. Your risk currencies being your Canadian dollar, British pound, euro, Australian dollar, New Zealand dollar, and so forth. And then your safe haven basket of currencies being the US dollar, which is the world's reserve currency, the Japanese yen, and the Swiss franc. I primarily trade US dollar pairs and Japanese yen pairs. You can trade Swiss franc pairs freely as well. I just never really studied them or looked at them. But the Swiss franc is also a safe haven currency. So whether it be on Euro USD, Euro JPY, AUD USD, even AUD USD is going to look very similar to this. It might have had a bit of a deeper pullback because of Australian interest rates and their central bank positioning being a bit different, but still on the higher time frames, it holds very similar structure when you're looking at these various pairs. Like AUD JPY and AUD USD are exactly the same, right? NZD JPY and NZD USD higher time frame are exactly identical. So it just teaches you a lot about order flow and market sentiment and how much of an impact it has from a macro perspective and from an intraday perspective, okay? But anyways, we were on GBPUSD, correct? Sorry, I'm getting distracted. So anyways, GBPUSD, you can see that overall we've had very bullish market structure from the pandemic crash and we've only had upside move, pullbacks, continuations to the upside, consolidation zones, and potential breakouts, right? When you're looking at GBPUSD, that's all you see with this trend, with this being the last price sensitivity area at around 1.36, that's holding bullish market structure, okay? You can see from this price sensitivity area, we extended into these highs printed by buyers and have failed to break any of those highs for the time being. So we do have that US dollar weakness, the fail to break this higher time frame demand area, bullish market structure still being maintained as well as some stronger bullish price action here. Now, we have a bit of a resistance here on the daily, which lines up with our higher time frame key level, but obviously the dollar's still weak. When we come to our intraday time frames, if we can break and retest above here, we're going to start to look for buy scalps in intraday trades on GBPUSD, and I'm going to show you that more on the intraday structure now. So you can see this is the failure to break that previous demand area on the higher time frame. I was just showing you on the daily time frame. You can see similar repetition where you have bearish market structure, bearish corrective market structure. You have the lows printed by sellers and you fail to break. and then you have a clean break and retest above those candle body highs at 378, and some next continued upside moves, right? So the technical repetition there is looking very similar, and when we're looking at the market structure, you can see that we're maintaining intraday bullish market structure. We just need clean breaks above 1.37800. If we can break above these candle body highs, resistance, and historical key level at 1.37800, or get another retest of 374, which was given to the private channel overnight for some high risk, high reward buys, I'm looking for GBPUSD buys in these areas. On GBPUSD, on GBPJPY, on EURUSD, my primary bias is bulls. Obviously, we're going to be waiting another 14 minutes as we have New York volume coming in and some economic data. But on GU, GJ, and EURUSD, I am in a bullish bias. We're just going to have to keep an eye out on our US dollar movement when we have the ADP private NFP data there at A15. It is going to have a short-term impact on gold as well as the US dollar. So if it leads to US dollar strength with that ADP data, then we're going to be shifting our bias on this pair. I'd only be looking for sells on GBPUSD if we break below 1.37 flat, this last little higher low printed here, and we have US dollar strength from stronger ADP employment data. Okay? Green boxes are the buy areas I'm going to be looking for on lower time frame price action, and the green boxes are my main bias. The red box is the sell area we will adapt to if the US data is much stronger than we expect and it leads to short-term dollar strength and we break below 1.37, we will adapt to that accordingly. I always have a main bias that I like to stick to fundamentally and technically, but that doesn't mean we're always going to be right. So as a scalp trader, when you're scalping, you're primarily going to be at the charts for a time window period. You're going to be there during London session from maybe pre-London till about into London Open, maybe from 2 a.m. Eastern till 4 a.m. Eastern. Or you're going to be trading New York session from about maybe pre-New York hours until NYSE. You're only going to be at the charts for a set window period because as a scalper, you're in and out of the markets very quick. You're catching your 10, 15, 20, 30 pip trade as per pre-planned analysis. You're in and out and then you're done for the day, right? It's not the same as if you're a day trader or if you're swing trading, where your day trading and swing trading should be more based on an alert system. That's what I'd advise anybody who has struggles with that. If you're scalping, pick one session and one time window within that session that you're going to trade. For example, you shouldn't be scalping the entire New York session. You shouldn't be going from like 8 a.m. all the way until 5 p.m. It's just going to lead you to overtrade. It's going to lead you to get analysis paralysis. And it's also going to lead you to be induced to take some more trades that aren't even there. Do you understand what I mean? But if you choose to scalp through a specific window, you're going to have maximum mental focus and mental energy. You're going to already have your pre-planned trade ideas, and you're most likely going to be lining your window up with volume periods anyways. For any scalper, I suggest you choose one session to trade and one 2 to 3 hour window. You can pick the 2 to 3 hour window as you wish. For New York, I would either suggest you either do something like 7 a.m. until 9:30, or you do 9 a.m. until 11:30. Both the 7 a.m. until 9:30 lets you see pre-New York as well as New York market open and NYSE volumes in the new 4-hour candle. So you have a lot of volume you can work with on the lower time frames as you're scalping. But even from 9 a.m. Eastern till 11:30, that allows you to set up with the new 4-hour candle, NYSE volumes you can see, and going into London close, which you also get some good moves as well. Okay? And the same idea applies for London session as well. If you're going to be scalping and you're trading London session, do not trade the whole session. As a manual retail trader, as a human being, there's only a certain number of hours that you're going to stay focused and have that mental energy to actually be in the zone and understand what you're looking for and what you're doing. After so many consecutive hours, your brain will exhaust itself staring at the charts, and you might not even notice it, and you might start doing some lazy, stupid, emotional shit and forcing shit that's not even there, right? Remember, this is all for the scalping style. If you're looking for more of an intraday day trade style where you don't want to catch 10, 20 pips, you want to catch 50 to 100 pips, then you shouldn't be looking at the charts based on a time window period. You should be setting up price alerts and be trading based on an alert system, meaning you do your intraday analysis ahead of time, right? And then you set up price alerts on where you are looking for entries. So for example, let's just say I'm Jeeve the scalper. I'm Jeeve the scalper and I want to buy above 378. Well, if that happens during the next hour, I can buy above 378, and this move right here, 20 pips, that's it. I'm done for the day. Right? That's it. That 10, 20 pips, scalping in and out of the market, I'm done for the day. But let's just say I'm Jeeve, the day trader, the intraday trader, or the swing trader. I want to take buys above 378, but my target is going to be potentially 100 pips to this next medium term zone. Well, number one, I shouldn't be mindlessly staring at the charts, hoping price is going to come to my entry. I'm going to have an alert set here, which I already do. There's an alert set here. And number two, once you take your entry, I'm going to have a hard stop loss and hard TP, where if my entry was here, my stop loss is going to be below these candle bodies at 374 for roughly, and my take profit is going to be that potential 120 pips, still having a 1 to 3 risk versus reward. As a day trader, once you take your entry, you shouldn't be mindlessly staring at the charts because it could potentially take 4, 8, 16, 20 hours for your trade to take place and play out, right? So psychologically, you really have to understand first, what are you trying to get out of the market? If you're scalping, you should be at the charts for a window period and be in and out, taking your jabs at the market and stepping off the charts and getting out of the way. If you're an intraday trader, day trader, swing trader, and you're looking to take advantage of larger ranges, you should be trading more based on an alert system. Does that make sense to everybody? And then what you're doing for day trades or swing trades is once you take your entry as per pre-planned analysis, you set your hard stop loss and hard take profit, and you sort of set and forget. Yeah, maybe you can come check your position every hour, every couple of hours, but what's the point looking at it every minute or every 10 minutes when you know it could take potentially hours for your trade to play out, right? For example, let's look at something like this. So let's just say you identify these lows and we wanted to take buys above 365, which we did in the Capital Hungry private channel, right? So you want to take intraday buys up to the next key level. That's fine. That's a 130 pip range. And your stop loss is going to be below these lows at 50 pips, whatever it may be. That's still almost a 1 to 3. It's roughly a 1 to 2.5 RR. But what a lot of people choose to ignore is once you take your entry, do you have the patience and discipline to actively watch that trade play out in almost an 8-day period it took for that trade to play out? It took the whole week for that range to play out. Do you have the patience to hold with this consolidation zone, to hold with this aggressive pullback that comes, to continue to extend your trade to your next take profit goal, right? So you have to understand your trading style based on your personality and what you're trying to get out of the markets. If you're going to be intraday trading, it's more of a set and forget as per your analysis and having the patience to hold to your next target point, or if it hits your stop loss, right? It's going to be one or the other. And if it hits your stop loss, that's a part of the beast. That's a part of the game. It's inevitable. But if you're scalping, we could come above 378, and within the same hourly candle, we could be up 20 pips in profit, get a scalp, and then come right back into the range. Within the same hourly candle, you could be done a scalp. You could have caught your buys above 378, take advantage of that scalp, and then you're done. And within that same hourly period, 30 minutes later, you could, like for example, like look at this. Yesterday, within the same hourly candle, this hourly candle was roughly 60 pips long, right? But yesterday, we broke above 378, and you can see at one point, we were 30 pips above the key level, and you had almost 30 pips of scalp profit within that same hourly candle, and you could be done for the day as a scalper, okay? On this stream, we're primarily scalping. Just because we're here for a quick short time window, we're looking at the charts from 7 a.m. Eastern till roughly 9:30, and we're looking to take advantage of those smaller time frame ranges and volatility and volumes with the session that comes in. All right. So GBP USD, either 374, buys above 378, or buys above these candle bodies at 38. These are the buy. This is my main bias, the area I'm going to be looking for buys with the green boxes. Yeah, some of these GU buys on the higher time frame were given months ago on the Capital Hungry YouTube. Same with GJ. The GJ buys for 50 pips, they were given on Monday as well. So that was pretty nice, you know. But anyways, I'd only be looking for the sells on GBP USD. Any of our dollar pairs, we're gonna wait until ADP data. All right, just because the US dollar is the world's reserve currency, so we're gonna get a lot more information about our movement on the dollar after we have that ADP private payrolls data, which is at 8:15 a.m. Eastern. It's roughly about 18 minutes from now. So our our US dollar pairs, we're gonna wait for that. All right. I'm only looking for sells if we break below 1.37. If you want to learn more about swing trading, you'll have to buy my course. I don't have a course. I got like a private service, but no, you don't have to learn about swing trading through the Capital Hungry private channel. If you guys go to this, if you guys just click this YouTube page itself, you'll see tons and tons of webinars across different time frames, topics. Whether you're a scalper, intraday trader, swing trader, you just have to use your resources that are at your fingertips. But that's up to you to put the spoon in your mouth with the food on it. You know what I mean? I can't put the spoon in your mouth for you. Yeah, so we're gonna be waiting for that US dollar news in about 17 minutes. Yeah. Okay. My main bias on GJ though in GU is buys. I'm just telling you guys what I would need to take advantage of sells. All right. For anybody who's coming in late, we've already done, we haven't done analysis on gold yet. Just be patient. If you rewind this stream, we've done analysis so far on GJ. First, it was fundamentals, market sentiment, the economic events we got going on, GBPJPY, and now GBPUSD. I'm going to go back and do gold analysis now and then go to the other dollar pairs, all right? Yeah, so we've already gone through the fundamental points on focus and market sentiment. We've already gone through the economic events we had overnight as well as today during the day. We've already gone through our mentor reminders as manual retail traders, and as well as GBPJPY and GBPUSD analysis. So you can just rewind the stream to whatever point you wish to see those parts so far. Now we're going to jump into gold, all right? Okay, everybody. So, gold. The reason that gold had this upside move after failing to break this liquidity zone so first of all, this is not a price crash. This is a price setup. See, this that happened during the market open that couple of weeks ago. I don't see it as a flash crash or anything of that nature. It's a price setup. I'm going to show you guys why it's a price setup. Okay, come here. I'm going to show you guys some historical and technical repetition. It's going to go over a lot of heads, but hey, I don't mind. Can you guys see the timeline at the bottom? Yeah, you can. Okay, anyways. This was the 2008 financial crash to the 2013 recovery. This was 2019 trade wars all the way into potential 2023, 2022 recovery. Okay, at the bottom is your little timeline. So during the 2008 financial crash, you had this massive upside move on gold, obviously as it gets inflated as a precious metal safe haven. Same thing from 2019 with trade wars, then potential Iran world war, then obviously the pandemic, right? You can see we then peaked these all-time highs, peaked your all-time highs. you have this aggressive pullback that comes down to a higher time frame demand area that gets created. Higher time frame demand area that gets created. Right? From these highs, years later, after the economic uncertainty, you start to have a bit of a correction phase and you get your first leg down here. First leg down. You fail to break that higher time frame demand area, coming back up to those same candle body high price points, which we're going to roughly gauge around here in this region. Here it's going to be roughly about here, right? And then you have your second leg up. Then, as you're playing in this market, you have another leg down, which was the price grab and liquidity grab that happened here again. Do you see that? Right now, when I'm looking at gold, and I was talking to the private channel about this, I see us in this phase right here. This same phase right here. Right? We're in the exact same technical and fundamental repetition as this green box right here, where we have potential to go back into the 1900s, especially as after we had this price grab here, what did we have the Federal Reserve just confirmed last week? That they're going to be delaying tapering. We're not going to see this next downside move on gold until we have maximum employment rebound, as well as interest rate hikes. And then tapering confirms. Then we're going to get this historical repetition where the US dollar is going to go back bullish, interest rates are going to rise, Federal Reserve is going to do tapering, and then you're going to have this massive correction on gold from below 1700s into the 1400s. But we are not at this step yet. We have yet to even break our higher time frame demand area still. Crazy, right? Same fundamental catalyst, except the 2008, it was a financial market crash. 2020, it was the pandemic. But the same steps the central bank took, where gold was so bullish here because the US dollar was being oversupplied, interest rates were cut here, right? During this period when interest rates are cut and inflation is rising, these are all bullish fundamental confirms for gold, and you peak into these all-time highs. Same thing here. When Trump first came onto the scene and was bringing trade wars to the table, the Fed already started to cut interest rates. Then when you had the pandemic come to the scene, you reach these all-time highs. Right? Then you can see after the pandemic, when you had all these vaccines come into play, economies open back up, you enter this higher time frame range on gold. Higher time frame range on gold. You have the same technical repetition of failing to break these bottoms, and now we're in this potential upside phase where we could go back into the 1900s or deep 1800s again, fail to break, and then we come down potentially a lot lower here. We're only going to get this aggressive bearish downside move from these highs here. We're only going to have this happen when the Federal Reserve tapers off stimulus support, decreases asset purchases, and then also increases interest rates. Those are all bearish fundamental factors for gold. That all decreases the demand for a precious metal safe haven like gold. But right now, are we in that stage yet? No, we're right here still. We are right here still. Does that make sense to everybody? Right? Look. This is 2008, right? That's the demand zone. Upside play, all-time highs, down, double bottom, bang, bang, bang. Then you finally fail to break this area. Then you finally have tapering and interest rate hikes and melt. This is 2008 to 2013. Okay? What do you see here? This is current time. Demand zone. Market fear 2019-2020 with trade wars, pandemic, potential Iran world war. First leg up, bang. Second leg up, bang. If we don't break there, then you're going to potentially come down here. Then you're going to have the correction. But right now, when we're looking at the repetition, we're still in this phase where we didn't break the lows. And we could still potentially, once we clear above these candle bodies, fill this range from the 1850s to 1900s. Yeah, especially for the new month. Basically on gold, it's going to be much easier to buy even with some of the intraday waves, especially if we don't have any confirms of tapering by the Federal Reserve and we don't have any interest rate increases yet, right? And what we confirmed from the last Federal Reserve sentiment, which I want to show you guys on the intraday time frames, is this. See this impulsive move here? Where we had this heavy liquidity grab on the downside and then this bullish engulfing candle that broke above this previous high. That was last Friday during Jerome Powell speaking at the Jackson Hole Symposium. What he discussed here is that we are not ready to taper yet. So when he said we're not ready to taper yet, we're going to keep stimulus active, this is a bullish fundamental factor for gold. It's the opposite. Jack John. This is somebody who's been watching the webinars on YouTube and is asking some good questions. That is what the federal... Now, this is where I'm going to talk about two concepts. And I want you guys to listen very carefully. Remember, what is the reason the stock market has been so bullish and who's making the most money off the stock market? Is it the general public and the middle class? Or is it the 1%ers and the wealthy? And why has the stock market been so bullish after the pandemic crash? Pop quiz, YouTube. Why has the US stock market been so bullish after the pandemic crash? And who is making the most money on the stock market? Is it the general public, the middle class citizens, the working class citizens? Or is it the big ballers, the whales, the 1%ers, the market makers that are making the most money? Okay, so good answers, everybody. So the reason the stock market has been so bullish is due to the support of the central bank, the flooding of the US dollars into the stock market, right? So what they have done through that is quantitative easing, increasing asset purchases, and decreasing interest rates. This is all why the stock market and the US housing market has been bullish. If you guys said Fed increasing money supply and putting it to the stock market, if you said stimulus, if you said quantitative easing, if you said low interest rates, you're all right. That's number one. Number two is who's been making the most money off this? Well, it's the Federal Reserve themselves. It's the corporate America. It's the big ballers, the whales. We're going to call them big baller whales. All right? Now, when the Federal Reserve increases interest rates and when they do the opposite of what they did to make the stock market so bullish, what do you think is going to happen? Let me show you guys an example. Let me show you guys an example on the US 30, and I'm going to show you guys 2008. So this was the 2008 financial crash, right? This was the economic recovery that came after late 2011 and into 2013. This is when the Federal Reserve stopped supporting the economy and increased interest rates. See how that increasing of interest rates, big baller whales, BBW. But anyways, you guys are fucking distracting me. That's, yeah, BBWs, that's our new term, BBWs. The BBWs run the market. Yeah. Anyways, you see how after the pandemic, the stock market was relatively just bullish, very similar to what it is now, because you have the support of the central bank, you have the US dollars flooding the market, then you have the investors and smart money riding with those buyers as well. But then here, you actually get a larger correction. Do you know what caused this larger correction here? Even though it's not as large as the pandemic crash, it was still the largest correction we saw in over 2 years, almost 3 years after the crash, right? Here you had some minor pullbacks. Here you had a bit of a correction, but nothing in terms of the size of this. What caused this correction? it was the Federal Reserve doing the opposite of what caused the stock market to be bullish, because you can't just keep increasing the US dollar money supply. It's going to lead to hyperinflation, and hyperinflation can crash a country's economy as well. So eventually, after the economy has recovered, they take the training wheels off and they stop providing the stimulus. They taper off the that's what tapering is. Tapering off the stimulus support. Tapering off that tap of US dollars flooding the market. They cut it off. And they also increase interest rates again. The rising of interest rates and the tapering causes this correction on the stock market. It doesn't break structure. It doesn't cause a crash. It causes a large correction. Then you continue your way back up bullish. When you're looking at the stock market now, we have to understand that the Federal Reserve is going to be much slower with their tapering and interest rate hikes than they were with their stimulus, because they're going to want to keep chugging away as many bullish gains as they possibly can on the stock market. So when they do profit take at all-time highs, maybe at like 38K we might top off, the correction that comes from rising interest rates isn't going to have a massive impact on the market. It's still going to be a much larger correction than any other pullback we've seen. And it's not going to be obviously as large as the crash, but the correction is going to be in line with the market structure, and it's not going to hurt the pockets of the 1%ers before you continue your way back up. We might see the actual tapering and correction going into months into 2022. Does that make sense for everybody? The Federal Reserve does not want to rush tapering or rush interest rate hikes because of the downside move it will cause on the stock market and on the US housing market. This doesn't just impact their portfolios, it impacts that whole spider web that is the financial market. It will impact it'll impact house prices, it'll impact cost of goods in the short term, it'll impact the stock market, it'll impact corporate America, and then yada yada yada. You understand what I'm saying? So the Federal Reserve is going to be 10 times slower with their tapering approach compared to when they actually were stimulating and supporting the economy and flooding the market. Think about it, like when they flooded the market, it was like a fire hose. Like a fire hose, like just tons and tons of US dollars, a high pressure fire hose, and they're trying to take out the fire that was the US economic crash with the pandemic. And then they flooded it even more to give it even more support. But when they're going to be tapering off it, it's like a faucet. They're going to be slowly turning it off, slowly letting the water go back down lower. You know what I mean? It's not going to be an abrupt stop. If it was an abrupt stop and they just increased interest rates out of the blue and they just tapered off the stimulus support, it would cause too much price fluctuation and downside on the housing market and the stock market. They want to make sure when the correction does happen, it's going to be from ample all-time highs, right? And when the correction happened, it's not going to impact the overall price fluctuations of the stock market. Yeah, reverse repo, the opposite of quantitative easing, whatever it is, and it's going to be similar to 2008 repetition. Does that make sense to everybody? Anyways, let's watch this economic data, then we'll go back to doing our analysis. I just want to see the impact on the dollar and on gold here. It looks like if the data's good, gold can have a bit of a downside pullback move still. But we're going to keep an eye on that and adapt accordingly just in one more minute. Sorry, I've been yapping so much. I've been yapping a little bit too much. $374, so not good. Gold, this can help some gold buys potentially. So it's above the prior, but way shittier than what they expected. It's almost half. Oh, it's actually 326. It's been revised already. So it's bad data, bad jobs data there. GU's going up like we expected. Euro USD is probably pushing up. UCAD's going to be dropping. We're looking for UCAD sells below 1.258. If we break below, we're looking for Euro USD buys from this retest zone we were already at and above 1.84. We're looking for GU buys if we break above 378. We're only going to be taking gold buys now if we get a retest. If we get a retest of 1812 as we're creating an order block and consolidation zone here. Or if we break above 1818 and 1820. So I'm only looking for gold buys if we break above pretty much 1818 or 1820, or if we get a retest of 1812. Bad economic data. It's showing us that the labor market on the private sector is not as rebounded or as strong as they expected. I didn't do a yesterday NY live stream. I did a Monday market update webinar. There was a lot of information given during that one as well. So this should cause some downside weakness on the US dollar. Japanese yen is relatively weak and flat still. GJ, we're just getting a retest and we're just ranging here at 0.800. But I'm still going to be watching GJ. GJ might do something like this quick, just with the short-term bad data impacting yen. Oh, you're talking about our NY live stream. And oh, sorry, bro. I don't know who's who now with the YouTube names. But GJ, we're still in a bullish bias. We had this nice upside scalp for about 13 pips, if anybody caught that by themselves. But then with New York market open, we had the pullback. So we're going to be waiting to see if we get a deeper pullback first, then break above 0.800, or the safer buys above 0.800. And gold, we're going to be waiting above 1818 and 1820, or the retest of 1812. But anyways, let me give you guys my gold analysis overall. So now, you guys understand that this 1680 price point is not random. This was not a price grab. This was not a market crash. This was not a flash crash. I see it as a BBW, big baller whale price grab. I see this as a price grab and price set up by the market makers, by the BBWs, by the big fucking juicy BBWs. All right, because what I just showed you guys on the higher time frame. From that point, we've been in bullish market structure. We've only had buys printed by buyers, highs printed by buyers, pullback phases, continuations to the upside, consolidation phases, and breakouts to the upside is all we've seen. From this high printed on gold, we had a bit of a pullback phase that retested the previous high, and now we're creating an order block above our 1812 key level. If we can break above this consolidation zone, we're going to continue to take buys, and if we can break above 1820, we're going to continue to take buys. Does that make sense for everybody? I'm bullish on gold, especially as the US dollar is bearish. Inflation is still going to be steadily increasing. Stimulus is staying active. And we have interest rates remaining low for the time being too. I'm still going to be bullish on gold. We're just going to be zooming into the lower time frames here, looking for entry points that we can capitalize on, some potential scalps. It does look like once we really break above these 1 minute candle bodies here, we can also take this scalp from 1817 to 1820 as well, going into NYSE volume. Right now we're reacting at these 1 minute highs. So we might get a pullback here, potential bounce off 1814, then the buys from 1817 to 1820, safer buys above 1820. That's a good question. Jeeve, the bad data for ADP. The bad data for ADP non-farm will have higher chances for initial jobless claims. It's not going to have higher chances for initial jobless claims, but it can give some signals for weaker data with the non-farm payrolls. But similar to what Joran said below, if you compare the data from ADP figures to the actual NFP figures, it's not always the same. The ADP NFP data we saw today is a private sector survey done. It's only done in jobs from the private sector. Okay? So it doesn't give the best reading of the overall US job economic growth. It gives a little bit of signals and hints for economists. It has some intraday impact, but the main meat into potatoes is actually on Thursday and Friday for jobs data. Okay? Which is going to come from, which is going to come from the jobless claims is more important on Thursday, as well as the non-farm payroll Friday morning, the unemployment data, and the wages data. These four figures, plus the next week after the JOLTS job openings, these are the most important figures to understand the U.S. economic job sector. So number 1, jobless claims. Number 2, non-farm payroll. Number 3, unemployment rate. Number 4, wages data. Number 5, JOLTS job opening. Jobless claims and unemployment go hand in hand. It shows how many people are not working in the economy. Non-farm payroll shows the change in number of jobs. Wages obviously shows how wages are going up and down. And then JOLTS job openings shows the number of new job openings available. So with those jobs figures, you get everything from the supply and demand side, from the employer side to the employee side. Okay? Yeah, right now we just have some whipsaw moves and some ranging. It is what it is. We're just gonna wait for better confirms with the new 30-minute candle and see if we can get those gold buys. But yeah, I'm in a gold bullish bias. I would only be looking for any sells on gold just because it's the new monthly candle. If we break below the previous highs at 1808, I'd only look for sells to take advantage of this range. If we break below the previous highs, if we break below these rejection areas, then I would take sells from 1808, 50 pips to 1803. Otherwise, I'm primarily looking for breaks above those 1 minute high buys. Breaks above 1820 buys, or if we still maintain overall bullish market structure. Bird bite to the moon. Nice. I'm just looking at the headlines to the left. Sorry, on the left of your screen, for those who don't know, these are live real-time news headlines. Okay? Okay, GJ buys are starting to look a lot better with the order block we're creating at 0.800, and after the hourly candle did that liquidity grab. GU buys, we're still going to have to wait above 378. Euro USD, we're only taking buys above 1.84. And UCAD, we're only taking sells if we break below this consolidation zone at 1.25800. Okay. I'm just waiting for the 30-minute candles to close across the board. And then I'm going to look for entries on GJ on the new 30-minute candle. Once we get a bit of a pullback here. Still maintaining bullish price action and market structure. I don't like this double top rejection at 9.5, but overall price action and market structure still looks good. Japanese yen is bearish like we wanted it to go. It's coming back down to these lows. US dollars bearish still. Volatility index is bearish. Equity markets are still chugging up to the highs. So now let's do some Euro USD analysis, as well as USD CAD and US 30 analysis, okay? Let's go to the daily time frame here on Euro USD. How often do I use the dollar index correlation for Euro USD? All the time. Hello, Capital Hungry from London. Hello, Mr. Hussein. Okay, so Euro USD. This is the last price sensitivity area on the higher time frames, where we either had a break and retest continuation up and buyers printing highs pullback phases, or consolidation zones and breakouts. Here you can see in this area, we had an upside move, pullback, continuation up. Here we had an upside move, consolidation zone, with the lows of the consolidation zone being that price point, take us into these highs printed by buyers, right? We had another aggressive pullback phase here during the start of 2021. We had some short-term dollar strength, still didn't break that higher time frame demand area, went back to these highs. We had another pullback down to 1.17, still didn't break this price sensitivity area, and potentially, if we break above these price sensitivity areas, to make our way back into these highs at 1.2s and so forth. Okay? So when you're looking at the higher time frame market structure, it's still bullish. We still haven't broken this higher time frame demand area, and now we want to zoom in more with the price action. When you're looking at the price action here, you can see as we reach this higher time frame demand area to the left and fail to break those price sensitivity areas, we've had much stronger bullish price action. You have more consecutive daily bullish candles. You have weaker minor bearish pullbacks. You're breaking above previous price sensitivity areas. And we have the potential for Euro USD to revisit these candle body highs. As long as we maintain this intraday bullish market structure, dollar remains bearish, and we have Euro equity markets continuing bullish. So we have the confirms that price action is bullish on the higher time frames, market structure is bullish, intraday price action is bullish, global equities, like for example, German stock market sitting at all-time highs. US dollar is bearish, moving its way down to these lows as well. So we have a lot of potential for continuations on Euro USD to fill this wick range and continue a bit higher here. When you're looking at the intraday time frames, you can see the bullish market structure that's starting to develop from those higher time frame lows, right? Essentially, we've already had some buys play out that was called in the private chat, as well as the Monday market update webinar. If you guys were watching on Monday, I did this webinar here, Monday market analysis, where I was talking about playing US dollar weakness, Japanese yen weakness, and some nice 50 pip GJ buys were called ahead of time, as well as the Euro USD buys from the break above 1.8 and the break above 1.76, the GU buys from that retest, and some of the UCAD sells. So when you guys get free time, the analysis given in this webinar is still active. We just want to keep in mind that we're starting a new monthly period now. That's the only difference, okay? So Euro USD intraday time frames also creating some stronger bullish market structure while breaking out of the intraday bearish market structure as well. We've already missed the potential pullback buys over the last intraday period, which was 8 hours ago here during London session at 1.18, where we had a nice break and retest of that medium term zone. The next set of buys is going to be above 1.8400 that we're going to be looking to take advantage of for scalps and intraday trades. So for Euro USD, if we do get another retest of 1.8, that's fine. This is the next set of buys I'm looking for at the green boxes. Once we get to these price points of interest during the new 30-minute candle and going into NYSE, we'll be looking for buys in these areas. It's good that the US ADP data was also poor. This is helping our US dollar weakness bias even more. Could you run through the Dixie correlation of Euro USD? Sorry, I cannot. It's explained in over probably maybe 40 webinars on the YouTube page for free, not even like in the private chat. It's explained in tons and tons of webinars, right? I do both trading and a capital hungry private service. Any trades I've taken, you can just go see on my Twitter, Telegram analysis channel. It shows the live tag. It shows my name. It shows the trades, full trades taken, wins and losses, slip sheets. Same thing as Roger shows, except I don't have my own broker, but I still show the same information as him. But yeah, you guys can go check that in the Telegram analysis free channel or my Twitter, or yeah, any of those free platforms. And for the Dixie correlation, I explained it in tons and tons of webinars. It's in like on the YouTube channel for free as well. Okay. Yeah, so these new 30-minute candles are just opened up. So I'm just letting GJ here on this new 30-minute potentially create that lower wick, which it's doing now, right? And then waiting for the 1-minute price action above 0.800 to start taking the buys, at least to revisit these highs and potentially 152. I'm just being cautious that we can get a bit of a deeper lower wick and price grab here, and then letting it come back above 0.800. For GU, we're just waiting for the breaks above 1.378 for some further buy scalps to take advantage of there. Euro USD, we're going to be waiting to come above 1.8400. In USD CAD, we're waiting for the breaks and retest below 1.25800 for scalps below the key level, playing the US dollar weakness, some strength with the Canadian dollar in the short term, with oil going back bullish, and obviously that poor economic data, bearish price action and market structure. So GJ on bullish bias, GU on bullish bias, Euro USD on bullish, gold on bullish, USD CAD on bearish. Yo, I got a very raspy throat right now because I didn't drink any water yet this morning. Let me go fill my water bottle and grab some water. I keep getting like a freaking hairball in the back of my throat. No homo. 1 second here, everybody. I still gotta grab some water. Okay, feel a lot better. All right, let's see what's going on here. 8:36. All right, let's check what's going on. Okay, GU alerts popping off. We might be getting our GU scalps here if we get some continued 1 minute closures above 378. I could see the potential for, if we don't close above, to get a quick little pullback, then continue our way up here. GU, we still have that dollar weakness. Euro USD break above the level yet. That's approaching the level. UCAD, we're waiting for the breaks below 258 to take some better sells. GJ, what's GJ doing? All right, GJ is creating a bit of an order block at 0.800. We're still holding the support here, but I do not like the price action on the 1 minute time frame in terms of the exhaustion we're getting at these high points. So we had some nice price action with the fail to break below coming back above, but I don't like how we keep rejecting in this area here. So we're going to wait for better trades on GJ, as we're not having the cleanest price action right now coming above 0.800, and we can get potential deeper pullbacks and better price action with deeper pullbacks. And with GU, just be patient as well. This isn't the cleanest candle closure above. We're going to get a little bit of a deeper retest probably like this to revisit these candle body highs and then break back above, going into the new 4-hour candle and continuing back to the bullish side. All right, so have some patience. We're coming towards our entry areas, but not good price action confirms to enter yet. Too much noise and sensitivity on GJ here on the 1 minute time frame. And when I'm looking at the candles here, I don't like it when you have equal candle body sizes. I don't like when the bullish candles are the same size as the bearish. You don't get much clear sign of direction or buyer's momentum, and we keep rejecting in the same area. So it looks like GJ is going to give us a possible deeper pullback, then come back above 800, with the safest buys above 8.5 if you want on GJ above this little order block here. And then you have to watch reactions at about 9.5 above here when you're looking to the left. Okay, so let's be patient for those GJ entries. Not the cleanest price action on GJ. GU, also be patient. I could see us getting a deeper pullback or a cleaner break and retest of 378. Euro USD, we're waiting for the breaks above 1.8400. Remember, the trade ideas given through this stream, even though I'm not going to be running the stream for 5 hours, if you are a scalp trader and it's a part of your trading plan and you have not taken any trades yet and you're still within your time window period, these trade ideas can still play out over the next few hours going into London session close and so forth. All right, so don't have FOMO and don't fret. UCAD, we're waiting for the breaks below 258. Did we do analysis on US 30 yet or no? Did I say the trade ideas in US 30? What did I not do analysis on? Gold. Gold's looking better on this new 30-minute candle after it did that retest of that order block high I was telling you guys. If you guys rewind it, I literally told you I was gonna do this. If you guys rewind it, I literally said we're going to get a pullback to these candle body highs, and then we'll start to break above here. Potential cleaner moves now if we break above 1816. Oh, I didn't do, okay, I didn't do US 30 yet. All right. Okay, US 30. Obviously, higher time frames on US 30 is extremely bullish. And we all know fundamentally why it's been bullish. It's been bullish due to the support of the central bank and obviously the Federal Reserve flooding the market. But we're sitting at all-time highs right now. Two things have only been happening on US 30. You have upside plays, pullbacks, and continuations up. Upside play, consolidation zones, and breakouts, right? What I'm trying to understand on US 30 here is we can either have two things happen with this consolidation zone here. Similar to this consolidation zone, this one, and this is why you don't want to rush anything. The first thing that can happen is that there's enough buy orders in the market. You break above the consolidation zone after failing to break the zone lows, and you extend up into new highs. For example, here, example here, and example here. But if you do not break the highs of the consolidation zone, then we can have a more of an aggressive pullback phase to retest a previous price sensitivity area like seen here in these situations before having the continuation back to the upside. So essentially what I'm looking at on US 30 is I do not want to play guessing games within this zone. What I'm essentially looking for is that either we're going to break and retest above 35,550 and have enough buy orders in the market and validate it with a breakout of consolidation and a breakout of these highs to take advantage of stuff that happens like this. Or you're going to get a clean break and retest below 35,250, get a pullback that's going to retest probably 34,500 and then take the buys up here. So the trade ideas on US 30 I see are based on the consolidation zone at all-time highs. My main bias is buys. If we can break above 35,550, easy buys. If you break below these consolidation zone lows, you can take some pullback sells. Otherwise, I'm primarily waiting for either the breakout buys or the pullback to complete and then 34,500 buys there. That's what I'm primarily waiting for. Okay, so right now when I go more into the intraday time frames as well, I don't really want to mess with this range here. This is the range I'm going to map out. I'm either waiting that we break below and get a deeper pullback and get buyers in from better price points and continue back up, which usually goes to revisit a previous low area and you get some much better price action confirms and much better price points to enter your buys. Or I'm waiting for the clean break and retest above the order block highs for those buys. This range right here has been too messy and indecisive for me to mess around and play with. Okay? Does the dollar correlate with US 30? Yeah. Yeah, the reason why the stock market's been so bullish is because of the dollar being flooded into the stock market. The US money supply being flooded into the market. That's why it's been so bullish. If you guys want a good webinar explaining the entire pandemic crash and what happened behind the scenes with the financial markets and the US dollar impact, gold impact, go watch the pandemic and central bank timeline analysis webinar. From 13 minutes in, I break down what happened to the dollar and why. I do a full timeline here, tell you exactly what happened and why it happened, right? I tell you the economic data that followed suit. I show you what happened with the FOMC summaries, the exact movement and why. I show you that what happens if stimulus is going to stay active and data is not strong enough, and what would happen if the interest rate hikes are confirmed, the impact that this would have on pairs like USD CAD, gold, and so forth. It's all right here. Right? So, yeah, there's a lot of educational webinars here overall. If you guys want to jump into those, tons and tons of stuff. Yeah, so yeah, tons of webinars on fundamentals, technical, psychology, and so forth. What's this? Sharma FX made 3 million on Bitcoin. This is cap. She's never even traded live herself. She's never even traded live. She's only used FTMO. This doesn't even make any sense. What a freaking, yeah, she's a fucking scam. She paid for Yahoo Finance articles. And her friend used to be in Capital Hungry and robbed Capital Hungry. No profits? It's like, what the fuck are you... Yeah. But her YouTube only has like 500 subscribers. Fucking weird. Yeah, someone wanted me to look at that. All right, let's go back to topic here, shall we? Oh yeah, but yeah, make sure you guys join the Capital Hungry free Telegram analysis channel. Links are in the description as well as here. Capital Hungry News Twitter. And Capital Hungry YouTube channel will have everything you need. You have questions about the US dollar, you have questions about gold, questions about scalping, questions about technicals, fundamentals, it's all here. People like Sharma FX and Stefanos, those two fat face fucks, they copy Capital Hungry. They take clout from Raja and I, then they go do their own mentorship and they copy Capital Hungry, pay for fake articles, show demo profits in the millions of dollars to scam the retard people of the community, you know? Okay, where was I? I'm fucking losing track here. Oh yeah, we just gave US 30 analysis. Okay. Gold buys from 1816 on the dot to 1820. Anybody take those by yourself? I was doing US 30 analysis, but we gave the analysis ahead of time for scalps up to 1820. Who took these? If you took these, I would secure some partials and secure your scalps at 1820 because obviously we're reaching those previous highs. The next set of buys will be above 1820. All right, so it made sense. We got that little pullback for the new 30-minute candle. We broke above that 1-minute rejection zone. Nice break and retest above 1816. It ran up to almost 1820 now. Okay, GJ is still not the cleanest price action so far. It's still just messy ranging. That's why we're not touching it. GU gave almost 10 pips as well. If you took the GU buys, it's 10 pips, but nothing crazy. Euro USD, we're still waiting above 1.84. And USD CAD, we're waiting below 258. So far, the only trade called out that's played out is the gold buys above 1816. We're looking at to break above these candle body rejection points across the board here and take it back up to previous highs around 1820 price point. So nice scalp trade there, in and out of the market. Take your profit and get the fuck out if you're a scalper. The next set of scalps will be above if we break and retest above 1820 now in the lower time frames. Okay, everybody. Yeah, I did a full diagram on what I was looking at on gold. If you guys rewind this stream here. Let me show you guys actually if I rewind it. One sec here. Let me find it. What the fuck? What time was I doing the gold analysis, man? I did so much analysis from higher time frame to the lower time frame. Stream is out of focus? What's that mean? Is there something wrong with the stream, everybody? Here we go. Go to rewind this stream to 30, right here. Rewind the stream to this timestamp. Rewind the stream to 3148. This is where I drew the diagram. Pull back from this high up to retest the line. Double bottom, break and retest up to 1820. If you want to see what we were talking about on gold analysis, it was given to you ahead of time right here at 30 minutes in. The gold scalp analysis was minus 31.48. If you guys go to there, that was the scalp idea we were looking for. Either the pullback high risk buys here at the retest of 1813.5, 1814, or once you break above 1816 buys with the 1 minute candle closures above. Target was 1820 target. Yeah, my stream's okay. Here, you can even see before I draw the lines. So here you go. Here's GBP. This is GBP right here, 30 minutes in. We marked out this zone. This is me. This is some inception. I said we're going to come down to here. Then break above and go to 1820. Buys to 1820. Next set of buys above 1820. So it's the magic yellow line. You can go rewatch the stream if you want. Yeah, it was there. All right. I don't know. I don't know what else you would want. Sorry. Yeah, honestly, I don't know what else you would want there. That's exactly right there. Just rewind. There you go. All right. Okay, everybody. What do you guys talk about? Fitness love? Oh, you guys are talking about some of the trolls? Nobody wants me to roast the trolls anymore. They just want me to give information, so I just been giving market information instead. Everything so far, it's only been gold for analysis on. The execution is dependent on your fucking hands. The execution is dependent on if you press the buttons or not. I don't know mini taps. Why don't you figure it out? You're the expert here who trades without a trading plan, aren't you? You don't have a trading plan. You talk shit about Capital Hungry. You watch every stream. You tell us where you would enter. I gave you the exact pathway of price for the last about, what is this? I gave you the exact pathway of price for the last almost 60 minutes. I gave you exactly where we're going to come down to, where we're going to bounce, where we're going to break above, the targets we're going to go, the entry points. Yeah. So I don't know what else. I don't know what else you need. But now, everybody, keep in mind, as we're approaching these new highs, we have the new 4-hour candle in 4 more minutes. And also, this Capital Hungry stream is coming to an end. I'll see all of you guys next time. I gotta go do a private session with the Zoom chat now. I'm about to go do a Zoom session with the chat. So thank you guys, everybody. The trade ideas. No, I do not. I'm not a scalper anymore. As I switch to New York session, I'm looking for more intraday trades. I'm only taking 3 to 5 trades a week during the New York volumes. And I took gold buys yesterday from 1803. But anyways, everybody, there was a good scalping session. We gave some nice fundamental. So pretty much to recap the stream, we went through our fundamental points that are impacting the markets and how we're going to use that information to our advantage, which is on your screen right now. We went through the economic events where we used the 8:15 a.m. Eastern US ADP to our advantage, and that helped us to have some dollar weakness and take gold buys as well as GBPUSD buy scalps. We gave fundamental and technical analysis on gold, GBPJPY, GU, Euro USD, and UCAD. We went through our mental and psychological reminders as manual retail traders. and I answered the questions I could as we were going through all of that analysis. We broke down news events, economic events, fundamentals, technicals, psychology, and everything in between. If you guys enjoy this, please make sure to subscribe to the YouTube channel, like and subscribe. Go indulge yourself in all of these other webinars. If you guys think I'm smart, if you guys think I'm smart, if you guys think I'm something special in the markets, please remember that you can learn everything I have. Like everything that's in my head, I'm not special. I don't have a photographic memory. I don't have some crazy genius IQ. I'm a retard just like you guys, but I'm just a retard who put in a lot more work and effort than you guys and the majority of people, you know? So watch all these webinars. You have over 100 webinars. There's not a singular clickbait webinar here. There's nothing that's going to be like, oh, wow, I got clickbaited. You're talking about hour-long webinars across fundamentals, technical, psychology, my process, U.S. greatest transfer of wealth, GBPJPY. Where else are you going to get a GBPJPY fundamental and technical history timeline? I called, look at this. You guys want something? You guys want something crazy? You guys want something crazy? Where is it? We called GJ buys going up to 150s from this webinar July 20th by just simply looking at the historical repetition that's going to come with a recovery stage and how we would come to these lows, fail to break, and go back up from these lows up into 150, 160s on GJ. So remember, you guys can all learn the same stuff too. This was for free, July 2020. All this stuff is so overlooked on the Capital Hungry channel. You guys have no clue how much you will learn if you just go through all these webinars, right? Capital Hungry News Twitter, it's not as many headlines or as consistent headlines as the news terminal here to the left for private members. And then you have the Telegram analysis free channel. Thank you guys for your support. I'll see you guys on Friday. I'll see you guys on Friday for the psychology stream. So this is the new YouTube schedule I'm going to be sticking to. I'm going to try my best to stick to this YouTube schedule. Mondays at 7 p.m. Eastern before Asian session is going to be a Monday market update. Maybe a webinar that's maybe 30 minutes to an hour long where I'll be giving analysis and my 2 cents on the markets. All right. Wednesday, 7 a.m. Eastern is going to be our scalping session. 7 a.m. till 9 a.m. 2 hours long. Friday is going to be a self-development video, either on fitness, psychology, risk management. You know what I mean? It's going to be a more personal video, maybe about some trials and tribulations I'm going through that other people can relate with, fitness advice, personal development advice, psychology, risk management, and so forth, emotional control and so forth, society rants. You know how I like to do the rants every once in a while? Friday does not have a set time. Friday will never have a set time. It's going to be when I'm feeling good. So sorry about that. Monday, set time 7 p.m. Wednesday, set time 7 a.m. Friday's going to be like, I'm going to go random. I'm going to go live randomly on Friday, maybe even from my phone. You know what I mean? Just about rants about society, rants about markets, psychology, self-development, and so forth. Okay, everybody? Thank you so much for your support. Thank you for attending. We got to catch some solid GJ buys. We were smart and stayed out of GJ as we expected a deeper pullback. GU had some 10 pip buys, which are still potentially active. Watch Euro USD. Buys might come above 1.84. And UCAD sells below 258. So still watch out for those. And I'll see everybody on Friday.